today, because this is actually what it, you know, I believe is the most important part of trading. Now, what is the most important part of trading for you? Let's start the quiz now. And you have to tell me. You gotta tell me, what is the most important part of trading for you? Come on, throw anything that you think of it. All right. There is no wrong answers. Money management, that's excellent. What else? Exits, yeah, that's right. Any more? Any more? I need more. Direction, yeah. And not something related with money management. I need a little bit more. There are two very important essentials in our in there, which is, you can help me. You can help me. You can help me. Exactly, risk to reward, Greg. You got it right over there. So money management and risk reward. Why is important risk reward? Why? 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 Rita, what you reckon? Why is important, so important risk reward? Even before money management, risk reward has to be on the right place. Why? Give me the reason. What is risk reward and why risk reward has to be so important? Anyone? 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 Still make money with lose interest. Exactly right. Yeah. Any other comment? That's very good there. Okay, let me see if it works. This one. Capital preservation. Yeah. Yeah. Something related with the still make money and losing trades, Greg. Something like that. I just want to just you give me the answer, so or you already gave me the, so we don't lose the account. Yeah, something related with the still make money without with losing trades. What does mean? Do you still make money even having losing trades? I remember one day that a guy came to me, he was so eager to see my account. He was expecting to see, all winnings, that was maybe 10, no, not 10 years ago, maybe 6, 7 years ago. And, and I showed that in 15 trades, I have 10 losses and 5 winners. Oh, his face just went down and said, my goodness, I think I came to the wrong person. And it's like, why do you think I have a crystal ball or what? Helen said the average overall return will still profitable even if there is a loss. Yes. Now, okay, let's what I want to get is still making money with losing trades. And looking there with ratio with proper risk reward allows to still make money with losing trades. Yeah, but what does mean about being still make money and even with the losing trades? Does mean that you don't have to have 100% right. All right, that you have to find a system that at least giving you 50% right all the time. That is what is the important risk ratio reward. And it match exactly what everybody's been saying. They will still make money when we lost it, because the pressure that we have about every trade that we open and we think, oh, this has to be the winner. Look, I did have a wrong habit many years ago when I was in the stock market that, setups. Oh, I was king with setups, and this setup is, and when I looking through sometimes the market was going like that, oh, everywhere there, and nothing is working, and I'm gonna find a setup somewhere over here, maybe somewhere over there. No, this is proving me this is a very long, consolidation breaks. I'm gonna just jump in there because this is going to go to here. And then not only that, but I'm going to actually triple or quadruple my lot size. And because I was using CFD, and guess what was? That was actually the one lose. The one trade could take 3 months of all winnings because I move out of money management. So risk ratio reward has to be in place, and money management has to be in place too. You cannot jump because this looks so beautiful. You cannot just go and jump in this and say, yeah, this is the trade that has to happen. No, all trade has its risk. So let's look now at risk ratio reward. I forgot to open actually my app. So what we look in, the perfect risk ratio reward is 1 to 3. All right. I think a 1 to 2 is quite good, but I think a 1 to 3 is achievable. And we're going to study this today. So 1 to 3 does mean if you put it $10, your reward will be $30. So this is your stop loss, and this is your take profit. All right. If you put in $100, you want it $300 here. If you put in $1,000, you want it $3,000 there. Now, another question. Which of these two are most important? The stop loss or the take profit? Lauren said the stop loss. Anyone else? I remember Mac Douglas trading in the song. He's an American guy. He's saying, that so many people put the eyes on the profits without forgetting the risk, and the risk was the most important part. So Greg said the stop loss. All right. So we got that one there right. Okay. So that's correct. Now money management normally has to be with risk appetite. So if you want to trade, I think a small amount of small accounts, it's a very aggressive 10%. So as the account grow, 5%, and as the account grow, you're going to 2 to 3%. So that's normally the exposure that you have to have all the time in trading in the markets like this one. So this is, when I was in one of my expos, I met a guy that said, look, and actually this guy was in the Trading Edge magazine as well, and he said, Jeff said, look, I like everything he heard me my speech and say, but you actually live in something very important. Trading is not about technical, fundamental, economical. Trading is all about money management. So I couldn't understood the way why he said that, but then years later understood very clear, what he was meant to that. Now, I want to tell you something here. For me, the most important part is take profits. What you reckon? Do I am right or I am wrong? Or if anyone wants to ask me why? Take profit is the most important, uh, place to go. Now, that's why. All right, let me explain you why. If we got a trade over here, all right. If we got a trade here, you must know where you want to stop. Let's see if I said this is my stop. Okay. You need to know you take profit before you know you stop loss. That is a revelation from heaven. you need to know your take profit before you know your stop loss. Because once I know that from here to here, there are 300 pips, my stop loss will be 100. How many of you agree with me now? And I'm gonna show you something that is actually is going to really turn every trade not into winning, but into an amazing way to look these trades. All right. At least I have one, Helen. Thank you. If, for example, we trade here and we say, I'm going to trade it, you need to know you take profit there. So if you know you take profit, and this maybe is, another 300 points over there. So that's mean the maximum stop loss you're going to have over here is 100. All right. So without that, we are lost. Now, how do we gonna know take profits? And this is now is coming our lesson over here. Let's imagine that we looked at trade over here. All right. So here we wanna work it from the daily to the 1 hour only. So we're gonna be doing very, very quick over here. All right. In and here I have a trade. Now, when I'm looking over here, if I look here on the weekly, maybe the weekly candle close retracement. So the index meter is with me. So everything looks perfect. That's the daily app, and here we are. So we say now, we need to know our profit. Now, one of the we have two tools actually, but the other one I don't use it because the author of that tool, you know, you never know in the future. Remember the XC Master. But I like this Fibonacci tool that I have here with me. All right. Now, when I take these ones here, all right, somewhere there. Now, if the dungeon breaks over here, this is gonna be my first target, 67 pips. So that's mean, let's see, 60. So my stop loss has to be 30. See if I do 1 to 2, isn't it? If I do that. Otherwise, 15 would be my stop loss here. 15 there. All right. So now what I find that in this calculation Fibonacci tool is that every time the market present me with an opportunity, I have two targets. I have target number 1 and target number 2. All right. Now, what my plans are with the EA, I'm going to do this. First of all, on target number 1, I'm going to be taking 50% of my trades, which is this is the between the 0.681 or 18 I think, and the 0.820. So this line is actually 0.719. Is the between these two numbers is where I have my line. So I'm wanting these pips over here, all right, as my 50%. Then my stop loss will become break even when I reach this line over there. All right. So then my stop loss become break even. As well, I'm going to have 3 times this trade. So I'm risking, sorry. So I'm risking from here to here, 20 pips. All right. And I have my 1 to 3 win ratio reward. So if the market comes back, I still have second trade. If a market comes back, third trade. If the third trade makes the winning, means what? It means that I still can make money. I have a chance that this can give me that I don't have to be right all the time. Now let's have a look through the chat how we would have done it using this strategy alone. All right. Let's look something different than this one. There. Um, maybe this one is a quite good example. The market is consolidated over there. Maybe this one looks for me quite good. The market is consolidated, brings that date, maybe there, that match with that three strategies. So immediately I need to know my target from there. So, and there we are. So if the market breaks 5 pips above here, I want to be into that trade. All right. So if the market breaks above 5 pips somewhere over there, I want to be in that trade. So my target, my first target will be 40, let's see, 45 pips. So my stop loss will be 12 to 10. Now, interesting enough, I find that the 23.6 is actually matched 3 times the stop loss to the target. So whatever you measure over there, it's 14 pips, it will very, very close to do the 3 times to the target number 1. All right, so here it is, the market goes, my stop loss is below the 23.6, which is 3 times my, and otherwise, if we know our target over here, let's say at 45 pips, so that's mean I only need to calculate, we use a calculator and then, see how much is 3 times, but this is very close to that. So once the market reaches the area over there, 50%, the stop loss become break even, and then the second target takes the 50% off, or the trailing stop. Either way. All right. Now that trade is quite obvious, isn't it? How many of you think that trade is very obvious where we see over there? Now here we have a scenario. We got a day up, and definitely that would be, any of the 3 strategies will match with what the index meter is with us. So we need to know our target. So we bring over here that, we put it over there, and we know that if the market breaks from here, my target will be 74 pips. My stop loss will be 24, which is very close to the 1 to 3 scenario. So the market comes over here, get my first target. So I don't put trailing stop through here. So until my first target is hitting, and when the first target is hitting, then the trailing stop comes and take me out over there. All right, and then the market unfortunately came back, and we already did that one over here, which we did get that one over there. Let's have a look the Aussie. Now let's leave exactly where is the Aussie over there. So the Australia, and no, this is not the Aussie. This is the Aussie there. So that's that Australia and there. So we put it the same the tool. So we're looking for there. We have over here, and as you see, if this is my target, 50 pips, and this is 16 pips. So, and then from then, once you see that the day is coming, you're looking to minimize your stop loss, 6 pips, and then you out of that trade. Nothing wrong with that, isn't it? Then we have, we're looking just the direction of that, of where we're going over there. So we got over here, we got over there, and again. So we got right over there. We say we want 66 pips, but our risk is 20 pips. So 60 to 20. As you see, it's very close. I don't know why it's casualty, but there. But here in this case, the market went up, And do we need to put maybe break even? I'm not too sure, but possible should possible. So if the market reach 50, and these low volatility currencies break even. Otherwise, we take the loss and that's it. 20 pips are gone because that's what is happening over here. Now here we got another one there. All right, so we just look in the pullbacks. We don't trade the retracement. We just want to find the opportunity according to our strategies. So we look at the bottom over there. We're looking at the thing over here, and we got our targets. So we know that here I want to, 38 pips. So my stop loss will be maybe, 5, 6, 7 pips only below over there. Market comes to break even, and then it takes the second target. Now, when something is very strong, you could have the option to let that one there running over there. Otherwise, do the same exercise wherever you get a stop out and put the 1 to 3 win ratio reward, and it will work exactly the same over there. Let's have a look there. That's maybe that's a retracement as well, but in this case, we put in the Fibonacci over there. So in here, in this trade, you don't know with this kind of a strategy, you can trade any direction that you like it. As long you have the 1 to 3 win ratio reward, as long you put it in there, you can trade any direction whatsoever. So here we are. We like, let's see, for some reason all the index meter. I don't know how the weekly will look like that. Maybe we can see is the weekly candle close trend line. It's possible to that strategy over there. So we got that one there, and the market, breaks from here. What I want first is 35 pips, but my risk will be 15. So very close. I would not have problem for that. And my second target is get 97 pips, which is, sorry, here, 88 pips. Very close to the end. So I would definitely get those ones there. So today, now let's talk about today before still 42 minutes. My goodness, how time flies, huh? So today, how are we gonna set up? So we're gonna be talking a little bit more through the session. So here, clear we have a good trade. The chances of a trade, whether we're gonna be right or wrong, we don't know. But then we know the most important part now in here is that we know our target, and according to our target, we know our stop loss. So for example, if this one, now my real target that I want to get is the 618. So this is the buffer that I'm taking. That target is for this 5 pips below to that. So that's what I have over there. All right. So my real target that what I'm wanting is the 0.618. That's where the target I want to get. But I put it there. Actually, I show you the numbers. So just in case if you're interested to set up the numbers. So that number is minus 0.719, and the target number 2 is minus 1.719. All right, so that's the two targets that I have, which is the middle between that 618 and 820, and the negative side. All right, everybody got it that, and that it is. So we got now that. So we know that at the break of here, I'm going to trade that one there. So whatever is going to happen from here, I aim in 17 pips. Now I have 14 pips, so this is not quite. Oh no, this is what I'm looking for. Sorry, I was putting it right over there. So that's my distance over here. So from the market change there. So I aiming from the break over here, 42 pips. So, and I only have 15, 16 pips stop loss. So that would be that, and this is my target number 2. So, and now if I get wrong over here, this is my stop loss, one, twice, until I get to the 2 targets. Okay, so that's there. The other one we see, it was the pound US, and the same thing. Now, if we want to know our target, now I know my stop loss, 30 pips, and I'm aiming 90 pips or 89 pips, which it makes sense, isn't it? How good to how about that? So, and I know that for the pound, yes, I want to require it, but I will not be looking anymore. I wanting my target. I need to know my target. Without knowing your target, and look, that target match the monthly low over here, which is perfect as well. So, and then once the market reach my first target, I'm gonna be in a break even, and my second target will be a very nice 200 pips over there. Okay, so that's how I see, that the really there. The other one we look, it was the U.S. Canadian, isn't it? And we have a break. So suddenly I got from here, put it over there, and I know my target. So I aiming from here, 30 pips, all right, and my stop loss will be 10. Does that make sense? Now, if you don't want it the 5 pips above below, you can take it at for 1 or 2 pips, and that it will not make a difference at all. But once and here the real peace of mind that is gonna be that you don't have to be right. Sometimes volatility comes kick you out. You can be wrong 2 times before you be right 3 times, and the EA will manage the whole thing. How many of you like that idea there? Lawrence said he liked the idea. Oh, I have some question. Gregor said, is NT5 and NT-FIB does not show targets? Greg, you have to made up for those targets. So the normal Fibonacci tools comes with that. I will send you if you wanted that. Because here it cannot. So that I sent you today. Well, I will send everyone the numbers that how has to be for the target. So when you come over there, this is I put it myself. So it's not that that the NT5 comes with that, but you can do this in NT5 as well, and then you change it from this one over there. So this is the normal retracement, but this is the targets that I made up. Okay. I will put it there and send to everyone over there. All right, so everyone can have it there. But here is another one over there, so I know over there. So then, yeah, I'll leave it over there. I think it maybe even 2 pips should be enough. Like I say to you, my aiming is the 1618. So that's what I can play with 2 to 5 pips about there. Just avoid. But look, the probabilities are already in our favor. We know what we're looking. We saw those trades over there. Another one that we were looking, it was the Euro US, I think. There, yeah, this was. Oh, the Euro US was last week. Remember? But look, for example, that everything was exactly as we're looking over there. So immediately we just do that. And look how many hours took before the break over there. So we got over here. We once 32 pips. Our stop loss is 10. Who would like to risk that one there? What do you reckon, Rita? That's a good idea. So in that case, you can trade any possible direction that you want to trade. And this is good enough to tell us every single direction. Now, someone's did a question about, is this going to work for the 4 hours? I think I saw over here. Let me see. Who was the one that asked the 4 hours? I can't see. I better open that one. Lawrence. Well, let me tell you, it works for anything that you want to do, even for the daily. the weekly, the daily, anything that you want to put it there. The main thing, you need to have your ABC. All right, so that's ABC. That's all it is. And once you got your ABC, this is a very more long-term, scenario over there. You need to have something that, as you see, sometimes it reach, sometimes it doesn't reach. The more, bigger time frame, it works the same thing. Now, you enter somewhere over there. Let's see. Now look what your stop loss is. If this is gonna be your entry, look what the stop loss it is. Okay, you got a target of 148 pips, but your risk is 50 pips. So let's see, 150 to 50. Is that 1 to 3? What do you reckon? And then you become break even, and then the second target is there. Huh? But then this is really a key. Without knowing a target, we don't know our stop loss. And for some reason, this 23 matched 3 times this one. Don't know how that works. I believe it was an accident after all, but it works. So if here is somehow, here I'm gonna make my trade. So I want an 85 pips, and then my stop loss is 25. Would you like that one there? How many of you would like that? Then the break even, and that's it. Nothing more that can be done. Now, in the 4 hours, the same. No matter what time frame you put in over there, if you want to get, uh, more, less, and whatever it is. But if you are in a position, let's see the weekly candle close bring us to here. All right, this is very cool now for the weekly candle close strategy. So here we want to trade over there. We want to make sure that, yeah, for the 4 hours, we need to use the 5-10 pips risk. Now we need to know how far, because you know I never see a pilot jump in a plane, and if you ask him where you're going, and say, I don't know, I just jumping here and see where the wind take me. That before they sitting in the plane, they know they're gonna go to Sydney, Melbourne, of um of Brisbane, isn't it? So now here we got everything right. Now we need to know our target. So now I know that I aiming for 89 pips, and my stop loss is very comfortable at 28, 27. It reached my first target, you know, it reached my first target break even, and here I can say, maybe now I put in, because it looks to me that, here is doing double bottom, double top, sorry, and another 80 pips over there. And that's it. You not worrying anymore about that, but you say, I think I like that one there, isn't it? Without knowing a target, we will have problems to reach. So that's always looking not to that top, always looking the last leg that it moves from there. So that is there. So at the beginning of the week, definitely maybe we have down there. So 60 pips, so 20 pips will be my stop loss. So here, as you see, it got once. So the next time comes over there, and I got back over there in this one over here. So sometimes it's gonna work very beautiful, sometimes it won't work very beautiful, but what we can do, we talk, and like I said, any time frame, but for some reason I like the 1 hour. I like the 1 hour because when we come to the daily figures like this one, this is a very nice turning point, isn't it? From here to there. Not only that, but the turning point is giving us now the facility to say, okay, how we're going to do this. We just put it over there. So I'm aiming 46 pips. My stop loss is 14, and my last target is 112. Two targets hit it, and we are on the other side. How about that for Monday? You like this Monday now? So, and yeah, so whether it is short, long term, whatever it is, we're not meant to get the bottom, we're not meant to get the top. But if we know from here, this is my stop, The market stopped me once over here, but then the second time it moves out, it reached the first target, it reached the second target, and that's it. Sometimes it will not reach there, and that's what we know we might need consider the break-even situation, like this one. As well, if the first, if I see the market moving, that much, maybe I can consider, okay, this is a nice stop, but this is my aim. 60 pips, 20 pips, somewhere over there. The next day, I can actually, or even the day that become bearish, and then my stop loss is very, very, very small. So when we look in the market is coming up, and this is my first day down over here, the same thing. And this, to avoid these things, I guess is the index meta is the one that is gonna always put us into this nice trade. Remember looking always the first leg move over there. So the market breaks over here, 10 pips are gone. So the market plays again, put me back over there into the business. First target and second target hits later over there. Some trades will be the clock, and this is where the index meta comes and plays the important role for our trades. Make sure that we're taking something that is making. So at the moment today, I'm looking there. If you want to trade against the weekly there, that like I said, you can do it. If you look in all the yen crosses, look where they are now at the moment. So there are no techniques in here. So if the market breaks from here, we got 56 pip, but your risk is 18. We got another one over here. Now, when is the month? So take the closest. So we aiming here 94, and our risk is 30. So we're looking over there. All the yen crosses are there, but this could be just a possible retracement only. Now, it's nothing wrong to take those trades too. My target is 38. My stop loss is 20. So that's all we do. My aiming here, my first target is 38. My stop loss is 14 or 13 or 10. And then the second target over there. Swiss yen was the other one. And look where they are. We got definitely a turning point over here. So I aiming 47, and my stop loss is 15. And that's it. And that's how, we can, take those trades if you want to trade against it. But at least we got the two things that the most important things that we have at the moment here is that we're working with the 1 to 3 win ratio reward, which is you only need to be right 50% of the time to make money. Is our system give us 50% of the time? Maybe yes, isn't it? All right, my friends. I hope so you're enjoying that. And we'll see you tomorrow morning, same time, same place. I think I believe this is important for anything that we do. No matter where you're looking, without a real, knowing, where we're going. And as I say, it works for any time frame, no matter how far you look. If you are not the person that you want to stick in the computer, all the time, you only need to find your first ABC. And once especially the fractals are giving us always that the the first thing over there. So if this is my trade, this is my stop loss. So let's see here, you get a stop out once, but the second time you enter, your stop is still intact over there. So the next time you enter over there, you reach 200, and then you reach 600 in that. And that's how, could be monthly, could be any instrument, could be done in here. And at the same time, what I'm using is the close or one, and then the tail on the other side. So this is my trade. I aiming 230, and my stop loss 79. Once that these things are going in display, there's no problem to move my stop loss over and over again over there. All right, my friends, it's 1 hour. Thank you very much. We see you tomorrow morning, same time, same place. Have a beautiful day. Cheers, and bye. And I will make the chat soon. Oh no, on 11. Sorry, I have to go now. But look at this bank holiday today for America, so maybe we can leave today off. But yeah, but I think this one, will really put us into a few nice trades, and without the worry that we have to be right, 100% of the time. And yeah, once and the EA does the rest. All right. See you tomorrow. Cheers and bye.
Hey traders, thanks for joining us for that presentation. Great work from Jeff there, taking you through the risk to reward and using the Fibonacci tool to capture greater profits in the market. So if you'd like more information on GMTFX Live, please feel free to email me, shane@gmtfutures.com, or you'll see a link below for more information. Or if you'd like to join us in the live training room, there's a link there as well. So thank you for your time. Have a fantastic day, and we'll catch you on the next update. Cheers.